All right. Says
There
we're
we go.
live here.
It's giving me the countdown now.
Oh, great.
All right. Hello, everyone. We're joined by Adam Button from Forex Live, and we're going to be talking about seasonal tendencies, looking ahead into the month of September. Welcome back, Adam. It's always great to have you, and you give me some biases to look forward to trade in September. And welcome back to TradeGate Hub.
Hey, thanks so much for having me, Dale. On the road here today, but made it work. So, yeah, there's lots going on at the moment. Lots to talk about for tomorrow.
Yeah, that's a key ingredient to a successful trader or anything is overcoming adversity and being flexible, right, buddy?
Well, yeah,
So,
like we go back to the old Panama days when I was calling in from there, and yeah,
yeah.
I've been on the road a few times here. So I had a power outage and packed everything up, and it's always good to have a day like today where the power outage is rather than tomorrow in the middle of that speech or something like that. So.
All right. So before we get to some of the seasonal tendencies you're looking for in September, Adam, you have any thoughts on this virtual Jackson Hole meeting that begins today?
Yeah, I mean, I really think that was the medium was the message when they announced it on Friday after the market closed that it was going virtual. And if you
Yeah.
go back to sort of end of July 28th when we last heard from Powell, he's saying, well, Delta's not going to be a big deal. It's not going to really affect the economy. And then you skip ahead, 3-4 weeks, and he's saying, well, we're canceling this big live symposium that's really, the Kansas City Fed's main event, which you can see the economic, downturn from that if you're at Jackson Hole or anyone around there. And so, I think the market jumped right ahead on Monday and even on Friday to say the Fed's not going to taper or not going to get too aggressive on it until we figure out what's going on here.
Also, I've been thinking about this, not only just economic numbers and COVID, but the possibility that, we could be into the, we're probably the seventh, eighth inning into Fed Chairman Powell's term. And that's coming up, I believe, in February, the beginning of next year. And, I'm sure he's thinking legacy because I don't know what you think. Do you think he'll be renominated? Because there's talk that Yellen, who probably shouldn't have a say in it, but would prefer to have Brainerd.
Yeah, I can kind of see, there's these rumors too that he might have said, hey, I'm available, or he might have lobbied for Trump for the position, maybe when he was working with Yellen. So you don't really know what the relationship is between the two of them. I mean, you listen to them publicly and you think, well, they both seem pretty easy to get along with, but behind closed doors, you don't know what it's like, and you don't know how she might feel about Brainerd, or you can see the argument for Brainerd because she's more dovish and
Right.
if you want to get reelected, that's what you want. But can she rally everyone in the FOMC around her, or do you risk sort of a splinter there if
Interesting.
I mean, so there's a lot to consider there, but it's really hard to set up for it until you get some sort of something definitive. Remember all the rumors. I mean, you go back to how many times was Larry
President Trump threatened to fire him? Yeah, demote him.
Yeah, it never comes out at any central bank, really. Bank of Canada, we thought Wilkins for sure was getting it. And so it never leaks, and you never know ahead of time. And it's just one of those pitches that you got to wait till it leaves the hand before you decide if you're swinging or not. I think, Brainerd would be a sell on US dollars, certainly a dove.
Yes.
But, it might be somebody out of left field.
Yeah. And as far as dovish, definitely Paul is. In fact, he went through the quickest conversion of a hawk to a dove that I've ever seen in my career. All it took was singing Kumbaya with Yellen and Bernanke when they were all three sitting together after his last tightening before he changed course. And looks like they, threatened to maybe break his kneecaps or something unless he, turned around and understood that being hawkish in this economy wasn't going to work. You wanted to start off with CAD yen, so I'm curious, is it the Canadian the important part of it, or is it the combination with yen
Yeah.
coming in here was
Well,
September?
I mean, if we think about this chart, number one, this was the best trade of the year for half the year, right? Through June or till close to the end of June. It was an incredible trade from the bottom at the start of the year. And and it's also a really good representation of the sort of the risk trade, right? It's CAD yen, Aussie yen, Euro yen. They all look similar at the moment. And so those two things sort of drew me to it. And then you can start to see it. If you go back to sort of the tighter chart that you had, or even on this one, you can sort of see this very, very clear head and shoulders top that formed CAD yen, I guess, right in May. And then you get the two shoulders kicking off. And then, into, that's the one right there. You can see it so clearly. They have this clear neckline that's almost trying to be a double bottom as well. And then going into last week, I thought it was such an interesting chart to look at because it looks like it's going to break down. I mean, first you get the kind of close below the neckline there, just maybe barely. And then on Friday, I guess in Asia, it's just kicked off and started to look like, wow, it's going to crumble. What I like about this chart is it's so textbook, right? It's the perfect head, perfect shoulders. It looks like it's about to be a perfect breakdown. You even have I think it's the 200 day there, folding as well. On a technical sense, this was textbook. And I was writing about it 2 weeks ago, last week, whenever, I guess it's all happening pretty quick here now, last week, saying this is like a textbook breakdown. You can see some others as well doing the same kind of thing. And, you got to measure target around 80 kind of on this break. But looking at it, and I just think it's the marriage of technicals and fundamentals. And I was writing like, this is a scary chart. And there's other ones as well. Copper, Aussie yen, a bunch of them. They were doing the same sort of thing, sitting right at that knife edge of support. Right. And then I'm looking at the Delta cases and knowing how the market treats COVID and thinking, these look like they're going to crest. And if you look at, all this focus was on US and then Australia, New Zealand, where obviously it's bad right now. But if you were to look at Latin America, I mean, clearly going down, Russia, clearly going down, Europe, very, going up a bit, but solid. UK had kind of rolled over. It looks like
China, lockdown still?
Well, that, we didn't know which way it was going to go last week. But it's gotten a lot better. It did seem, they weren't rising in China. So you could
Have they reopened their ports?
I think that's still held up a little bit, or what? I mean, I might have read today that it was open up that big chunk, but if those shipping prices are insane. But
they are.
The market just needed to see that little bit of leveling off of cases, or even a slowing in the growth, and you get the kind of pop that we saw. So it's just such a wonderful example of, all right, you've got to have it all lined up to get that real sort of breakdown. And knowing that it was Delta, knowing what the bond market was doing as well, right? Yields had bottomed in 10s at 112, 113. Nice double bottom on that. Last week, even as equities were rolling over, wouldn't get below like 120. Yeah, you see it kind of curved down there. Beautiful double bottom, and then wasn't even thinking about retesting it again. Even though we're taking the taper off the table now. Right. And although you could argue that the market was looking more at a policy mistake on the taper, but, now it's kicked up higher again. So I think this, this strong rejection in CAD yen is pretty bullish now that it looks like such a false breakout. And copper was another one, is very kind of similar, not as clear of a head and shoulders pattern.
I kind of had this line here, Adam,
that
it took out.
Well,
yeah.
So that,
now it's back above it.
You can also draw it as a messy head and shoulders, right? Same kind of thing. Also breaking down, and then it's saying like, you know what? We're having big time second thoughts on this.
Energy too, Adam. Energy did the same thing. We had a kind of a descending triangle in the oil at 65.
Yeah, I mean,
right here. Right, see this?
Yeah. And it just looks bad. And how many other charts too? I'm sure we could probably go through 5 or 10. It was just, you're looking at this thinking, wow, I'm staring into the abyss. Like, because if you draw all these out, you're looking at oil back at 50 or copper down at like 280 again, and CAD yen doing what it was. And and here we are, right? Like that's the kind of painful part. Just looking at the technical side is it can steer you astray. Now you had, I guess, something like here the 200-day in oil, which caught it,
Yeah.
and now we got back above. I don't think it's on there, the 100-day. I think yesterday, but now we're just sort of flirting around it. So, it's a very interesting time where I think the fundamentals, you really got to be married to them as well, because it is suddenly looking a lot better. But tomorrow's a big day too.
Yeah, I mean shakeouts, and let's not forget it's August,
Right.
right? Light
Yeah,
volume, right?
and
People forget.
it is looking at all that thing, and that is such an important piece of the puzzle, saying,
Yeah,
oh yeah, there's this big technical breakdown. Yeah, there's a catalyst, but you say, well, hey, listen, it's August. You can't believe anything in August.
yeah. I mean, the Hedgies won't get back from the Hamptons for another week and a half, and it's almost like anything that's happening in August, and really was a lot of sideways, a lot of nothing, or people trying to press the downside, and all these false breakouts. I think I have to attribute to just maybe high frequency traders, etc., looking for liquidity through stops and no follow through.
Yeah, it was certainly the time to do it too. If you look at back at CAD yen, it really broke down in Asia, right? Thinnest time of the day, thinnest month of the year, and and it and that would be the time that you would try to push it. I mean, that candle there where it goes down through 85,
Yeah.
and pretty, you obviously ran some stops there, and you saw it almost everywhere last week.
Yeah.
So
There
uh,
was no one long after they did this, and the same thing happened in metals too. That flash crash we had on a Sunday night in Asia, where
yeah,
they took gold down like 40-50 bucks, and that actually ended up being a low. Anything going on in,
they go.
say,
Well, I was rating at the time too. I mean, there's nobody left in gold who's bullish. At that point, like it just seemed it was this nice bottom too, where it ended up stopping. You think, like, you look around, you listen to people. I mean, there were no gold bulls left, and you think, man, there can't be anyone left to sell down here. And
yeah, I've been looking. DSI's been pretty. Not a lot of enthusiasm, like gold in the 20s and silver in the 20s, and a lot of the bullish sentiments come out of the precious metals. Makes me want to look for possibly a place to buy. What do you think about this? Maybe looking to buy a pullback around 1740 or so, and if we
yeah, I
get
think that's
there.
that's the disciplined trade. I mean, and transitioning to seasonals, there isn't much going on in gold really till you get down to November.
Okay.
December is that's the time to buy. You get it like December 1st, ideally, but if it's you get a dip in November.
Right.
So there's not a lot great happening seasonally in gold. And that is this taper story is all baked in. So tomorrow, if you tell me taper, Powell's super dovish, we'll probably break those highs. And that would be the time to buy. Alternatively, he's not going to really say anything. It's where you ultimately come down, you say, well, he's going to want to wait till September. You have the option to wait till September meeting. Um,
Right.
so why not wait, see where Delta's at, see what else we can learn between then and now. And so maybe that ends up sounding a little bit hawkish, right? Because he keeps his options open. He
Mm-hmm.
doesn't take September off the table. So now you get down, 1750, 17. It wouldn't push it beyond 1740. What was the number you were at? 17. Anyway,
1740, 1750, right in there.
yeah,
Uh,
I mean, and that's not, you're not getting too close. You maybe have those old highs, old lows. It'd be nice if they held that 1750, which you look at those June kind of couple lows there. I would love to see another flush and an opportunity to buy sort of into December. But I mean, once it goes, it can pull a lot of bulls back in if it
right.
does get cooking.
Anything in the dollar during the month of September, a tendency, because to me it looks like last Friday, this little reversal day and a little false breakout over this 93.20 level, that perhaps this whole rally, this whole portion of the rally may be terminating. Is there anything that would reinforce that or conflict with that in September?
It's the fourth worst month for the dollar
Okay.
index anyway in the month, and the fourth best for the euro. So
Okay.
you have that's sort of middle of the pack, right? But it's closer to the third best in the last 20 years, sort of on average. So there is some basis for selling the dollar into September. Not a huge signal there, but
Okay.
it's there. So
All right.
that would be a little bit of a tailwind in that trade. And in terms of the Fed, well, they hike. I think towards the end of September, they're not going to taper. They're not going to announce the taper. The data coming up, it's not going to be great as we filter through this August data, right? We're going to get all the August data in September, whatever sort of headwind there was. I mean, we all saw consumer confidence, retail sales sort of poor. So jobs might still be strong, but I think they are going to worry a bit. I mean, we've seen a GDP downgrade. So Goldman took it down to 5% from 9. Bank of America, same thing. I'm sure there are a bunch of others. That's a pretty big difference for Q3. And the Fed's gonna want to wait and see. Wants to rush.
Okay. So we had a real nice move in the loonie.
Oh man, what a panic sell! What a
Yeah.
panic sell that was. I mean, and
Yeah.
it was like it just way overshot. I mean, there was based on it was like just over like going past Aussie, Kiwi. I mean, we got real problems there. You could point to oil, but even 62, where it was at the lows in WTI, is not really that bad for Canada. That was an insane overshoot um, in every way. And then what a beautiful three candle reversal, right?
Yeah.
Like as good as it gets on that.
So that may be it. Maybe we're headed back towards
Yeah,
123.
I think 125 for the first stop there, and then you clear
Okay.
out sort of last week's move altogether, and then once you go below that, I think you could almost call it top. I like what
Okay.
I'm seeing in oil. We talked about steel before, Dale. Remember, we were all very bullish steel last time we were talking, and
Yeah, I think I put up U.S. Steel.
yeah,
Um,
that's
do
the
you-
way. That's why we did that instead. But wow, steel prices are just insane right now, which speaks to sort of underlying infrastructure demand. Not that Canada's any kind of steel exporter or anything,
yeah. So
but
do you think it's a layup now that we'll at least get the first part of the infrastructure bill through, or could that still blow up because there's people against the second part, which is more about social safety nets and child care and
yeah, it's not
elder
the infrastructure
care,
then,
and it's 3 times as large.
right? Oh, yeah.
And the progressives are not going to go along with the first bill unless they're married together. And do you think that could still blow up? I mean, every president is tested, right? I mean, Bush had 9/11. I don't know what where Trump was tested from the beginning, but normally in your first year of your term, there are some type of tests for a president. And what just happened in Afghanistan, and now his legislative agenda and his popularity, his numbers have really dropped. What do you think? Is it?
A lot of those things maybe end up helping him though to get this through, right? Like I don't think we're at the point in popularity where going. Remember at the end of George W. Bush, like there wasn't a Republican who even knew the guy. When
Right.
he was at like 20. I think he set the all-time record for
Okay.
lowest approval rating. But probably Afghanistan fades. It might not seem that way right now, but 3 years does anyone care, even in the midterms? But this is such an interesting point. I think you can bank on the $1 trillion one, bipartisan one getting through, even if the other one blows up. I think the progressives would fold on that. But I still think there's the baseline for me is that you get some kind of compromise. It's not 3 trillion, maybe half that.
Okay.
Doesn't get everything done, maybe gets half of it, maybe, has a corporate tax hike, but not, 1 or 2 points, maybe, taxes on people above 400,000, whatever number they're pointing at, that'll come through, a few other things, and something gets done. And I think that's bullish for stimulus in general. But more so for, Mexico, Canada, sort of the rest of the world, because it is a drag for the US, although it will be inflationary. So we'll see how that works its way back to the Fed. I was writing a bit about the chip shortage yesterday,
Okay.
really the inflation, and it looks like now it's going to peak probably in October through December, so the Q4 quarter, but then really extend maybe deep into 2022. And then and it's gone through into autos. I don't know if you bought an auto or know anyone who's bought an auto. Like there's no negotiating right now at an
Yeah.
auto lot. They're like, yeah, here's the price. If you don't want it, the
Yeah.
next guy, like we're selling them as fast as we can get them. And that's extending even like printers, because work from home people where everyone's buying a printer, you can't get a print. None of this stuff is going on sale. So you have this inflation that will persist this year for sure, definitely into 2022. And then it's still there, and you might get peak sort of pass through on that inflation late in 2022, which is right when the Fed's going to hike. And then the chips, like the flood of chips is going to come, the flood of cars, everything, right? Because they'll be running at full capacity. And now you have some disinflationary pressure and the Fed pushing up, and then it might really kind of come apart. So it'll be interesting to see how all these things kind of play through late next year. It's right around midterms, I guess. And then there's going to be a lot of agitation in terms of inflation, in terms of rate hikes, and the market might really sour if the market starts to see, okay, a lot of these bottlenecks are being solved. Prices are going to come down on their own. You have some, but the Fed just hiked, and it could be ugly. And then you'll have the political uncertainty at the same time. Probably end up with like a split Congress, and so that then it gets paralyzed again. So stimulus is over if it hasn't happened. But I think it's blue skies for the next 6 months, and then we'll worry about that afterwards.
Well, you certainly were right about the U.S. real estate market even getting hotter.
Oh, it's not even. We're still in early innings, in my opinion.
Wow, because you know what? There's even battles over rentals now. I actually heard that there are more qualified renters after you put up a listing for rent that come in offering more upfront money, paying months in advance to secure the place. So it's even carrying through into the rental market. So I mean, we have a housing crisis. We have a housing shortage here in the U.S. Is it that bad in Canada?
Oh, I mean, prices are still a lot more than America and Canada, and that's one of the reasons I'm so bullish. I was like, the prices where I'm have doubled in 5 years. There's just outside of Toronto. Toronto's insane. I mean, it's insane. Vancouver, Montreal's insane now. I mean, all of Canada is insane. It used to be outside of the cities, like rural areas, 6 hours from anywhere. And that's even insane now. And that's the power of low rates. And I think it's coming to America. If you listen to the home builders, right? Because that's the only thing that can solve it. Interest rates are home builders, and interest rates aren't going up meaningfully. So home builders, they've even pulled back a bit because everybody's got the scars from the housing crisis.
Right.
Pre-housing crisis, they'd be saying, listen, I'm building like crazy. I don't care what I have to pay for lumber. I don't care what I have to pay for anything. I'll hire as many workers as I can and build like nuts. And they're building more now, but it's not, there's not that frenzy to build that led to some of the overbuilding maybe in 2008. And even if you go back to 2008 and you could redo it, and the Fed were to go a little sooner and they were to bail out a few banks, the housing crisis never would have happened. They could have engineered a soft landing, knowing what we know now about QE and the power of rates and everything else. So, what was TARP like $700 billion, right? Oh, we had a $700 billion. I mean, that seems quaint now. The $700 billion it's like nothing in today's money. So, I just don't see anything bad happening. And it's the same thing in a lot of commodity markets, right? These producers are just slow to build mines. Oil companies are slow to drill. And that's that sort of, we're in this weird paradigm coming out of the pandemic. We don't know, politically, everybody's a little bit off balance. Regulation, they're off balance. Housing supply, lumber prices put them a bit off balance, the scars from the crisis. And you think, wow, we're going to have this massive inflation in real assets and commodities because it's just no building. And then you look like it's happened in chips now too, right? Like they get burned so many times because it was a boom and bust. And you have to think of chips like a commodity. And they're going full out now, but there's no more capacity. But now take Arizona. Like they're investing $50 billion in Phoenix alone in building chip foundries.
Is that Intel?
There's Intel and Taiwan Semiconductors, like 50. Okay. And, if you look at somewhat like they're building more in Taiwan, South Korea, like I don't know how that doesn't end up in a massive bust. I mean, because the margins on they're terrible on chips.
Easier to produce chips and homes.
Well, yeah, and I mean, America's incredible at building, and I think it eventually catches up, but not until prices go up. I don't know, maybe another 30%. It's tough to guess, but a lot more. So yeah.
Okay, anything you want to wrap it with, Adam?
I mean, just last on the seasonals, this S&P 500 is the weakest month since 2000.
Oh, that's good to hear. I have some puts. So,
Now, now that's a 20-year average, right? But you got to remember a couple things have happened in September, right? So September 11th, 2001, that's
right,
the average, right? That was a terrible. It was down 8% or so
right,
after that.
right.
And then Lehman Brothers was in October, but the market saw it coming in September, and that was a tough one in 2008 as well. So if you strip those out, it's not quite as bad. But you look at some, that it's in there. I mean, there's obviously probably some good events that don't immediately spring to mind as well that boosted September. So, there is a bit of a headwind there, and there's an interesting oil's weak September through November every year. And natural gas is strong in those months. So maybe there's a bit of a pair trade there. Natty's also pretty strong. A lot of that's built into the curve, natural gas, because there's always a seasonal
Yeah,
demand skews in that. But the moment
right.
it gets cold, that first sort of cold day in New York, natural gas goes up 5% or 8% or whatever it is. So if we go right from hot here to cold, it would be interesting because there's a lot, it's pretty tight natural gas.
I wanted to ask you, I know you probably follow credit, but look at these are corporates right here, LQD, ETF on it. And, we peaked back in August. The chart doesn't look too good. In fact, it looks worse than junk. Any comment on that? I
I
mean,
mean,
they say if there is a bubble, it's a corporate bond market because of all the massive borrowing they did and how they used it for financial engineering for buybacks and dividends. Anything that you're, paying attention to in bond land
I mean,
besides sovereigns?
it's the greatest bubble in history, all of it, really. I mean, anybody. I mean, you look at the chart, but the absolute returns are just you look at them and you think, how am I'm going to lend this company money at 2% plus the insane spread that I might have to pay, and just to get my money back, basically. You probably lose it on inflation, and yeah, like you had junk. I mean, all of it looks awful. And yeah, you
Okay.
can go back and say right now, okay, the bond market was pretty smart in pricing in Delta. I mean, they were doing it in June, and everybody was watching yields collapse, being what the heck's going on? I mean,
Yeah.
every bond guy I talked to, yeah, Delta was like the third or fourth thing that they might have mentioned on a list. There was all these liquidity things, blah blah,
Right.
and it just looks like the bond market was way ahead of it again.
Okay.
The Fed starts tapering, we get inflation, things start to look good. Um, but then you look ahead and you think, okay, eventually America maybe might try capitalism again, might have another go at it, might let companies, um, sink or swim. Once the kind of government put is gone on, allowing businesses to fail, let alone corporate tax hikes, which do
Yeah.
seem to be kind of popular, whether
Yeah.
it's now or later. And I don't know. You could certainly make. I mean, who would buy any of this stuff? Who would buy and hold a corporate bond? So, yeah, that's. I mean,
Yeah.
it's
I
just the
just think that,
timing, right? It's the timing.
yeah, I think
Buy.
that's a canary to watch, is corporate debt. It's just you know, my nose for Pinkert market for, looking at what could take everything,
I mean, that's going to be the mother of all.
make things unravel again if they can't finance and pay out dividends and even buybacks have, I think, slowed down in
Well,
certain sectors. And
only sectors, they should be deleveraging, but everybody's just leveraging up more. I mean, it's just you see in a few industries what it's like to and how the market treats you. Look at oil companies, right? They're all trying to delever right now,
yeah,
and the market, they puts on like a 5 multiple on, if that, on all these companies in that kind of environment where you're putting all your money towards debt, and slowly getting cut off from the debt market, even though cash flows are incredible. And then you look at tech, which is borrowing at nothing, piling on the debt. Yeah, forward earnings maybe look good in 2024 or 2025, but at some point, if they're trying to delever and the bond market's lending it like oil companies 6 or 7%, even with positive cash flow, I mean those multiples just get swamped. So I don't know if that's the future, but I think you have to assume at some point there's a big deleveraging, and they never do it now when they should.
Adam, thank you so much for adjusting and finding a place with power today, and some powerful ideas that you've shared with our community today. Adam does a great job, one of the best news traders on the globe. And you can catch him at Forex Live, catch Adam's work, and I guarantee you it's going to give you an edge to know what Adam's thinking. And I appreciate you coming to our community again today and giving us a look ahead into September. Thank you, my trading warrior.
Thanks so much. We'll be doing it tomorrow, right at this time when Powell's speaking, and putting it all together and kind of piecing the puzzles as the puzzles, materialize out of the news. So that should be a good one.
All right. So jigsaw puzzle solver, Adam Button, and that's what the market is. And if you can't find where all the pieces fit, go to Forex Live and read Adam's work, and I think you'll get some clarity. Thank you, buddy.
Thanks so much, Dale.
Appreciate you being here today. Adam Button at Forex Live at FX_Button, and should be part of your intelligence gathering. It's part of mine. Adios, Adam. Thank you very much. That's a wrap.